All right, today I'm just going to critique the trades. In other words, I'm going to try to scrutinize and tear them apart. I'm going to look for reasons to not be in the trade, okay? Because I think if I cannot find a reason to not be in the trade, then I should probably take the trade, okay? So with the moving average trend line strategy, the most important thing is that everything's going in the same direction above all the moving averages. At some point, there's harmony in all of our time charts. The 10,000 tick on the top left, the 5,000 tick on the bottom left, and the 2,000 and 1,000 tick charts on the right side. Right now, what do we have? We are looking at harmony to the downside. It just now crossed underneath all the moving averages. This is turning into a strong sell signal. Price is falling below all the moving averages on all the time charts. Now, not too long ago, price was above all the moving averages. Why was it not as strong? Because the moving averages are not in order for a bull cycle. You got the moving averages underneath the 200. If price pops up over the top and the moving averages are underneath, obviously it could continue to go up, but it won't become a strong signal. It's a buy signal right here because these two moving averages have crossed one another on the 5,000 tick chart. It's a buy signal, but it's a weak buy signal. Until these moving averages get above the 200, it's a buy signal that has a lot of weakness. What we had here is price come up over everything on the 10,000 tick chart. It's a little stronger though, but you still have the 20 underneath the 50, and you still have some of it underneath the 200. The 200's flat. It's weak. You can just look at it and say it's weak. It would have gotten strong if this would have continued here, and the 20 crossed up over the 50, and those two would have been above the 200, and then price would have continued, and then we would have been looking for a pullback down this way to go up higher, right? And that's where we draw our trend line. It just didn't go that way. So we can't look at this. Now, it is developing into a strong signal. When would I be ready to take a short on this? If it is a strong signal and it's looking stronger and stronger as we talk, we have to wait for a pullback. We have to wait for price to get up here and then draw our trend line and then break, maybe retest and continue down. So that's how we have to, now we're in a waiting pattern, okay? Now, it's also possible that on the day chart here that we see, it's been going sideways the last few days in between, and this last week has been a sideways doji kind of week, and it's been an inside bar to the previous week. So this whole choppy week, sideways activity, we could see a lot of that, and a lot of head fakes, no real commitment to the direction. There should be some movement to where we can get some kind of trade though. There was an opportunity to short right here yesterday. Price had come up to the danger zone, which is between the 50 and 200. Everything is a strong sell signal because everything's below the 200. Everything is below all the moving averages for the most part. This is a strong sell signal. We see a trend line where it goes back up into the danger zone, and we see the break, and we have a minimum risk and an excellent reward on that. That's the best trade opportunity there. Now you could say, well, what about right over here? This one did not work as good, did it? Well, we would try to do that, and let's see what would happen if we did enter here. I'm going to show you the risk reward on that if I did take this trade. Let's say I entered somewhere here and my risk is at the top of that, we would have probably hit 1-to-1 on that. So there's the 1-to-1 return. It could break even. So the trade would not have lost anything. If we enter in on the break, we have our stop at the top of that pivot. We enter in right here. It would have hit 1-to-1. We would have broke even instantly by our trailing stop strategy. And that's perfectly fine. Not everything works. So now we're looking at another trend possibility, a trade possibility here as it continues to break. Let's take a look at some new trend lines here that we have. drawn this way. And here's a perfect setup that I missed. Perfect setup. Breaks the trend lines, consolidates with and retests with pintails. Excellent. Here's how we would have entered that trade right there. Stop at the top. Entrance, well, let's see. Entrance could have been, probably would enter somewhere in this consolidation area, I ain't gonna lie. Probably would want my stop to be above that candle up there. So we'd already be almost at 2-to-1 on this thing. We would be at 2-to-1 on this right now. Now, does that agree with all the other time charts? Let's draw that circle on all the other time charts and see if there's harmony with the other time charts. Okay, so what we have here is price had entered the danger zone on the low time charts. This is the 1000 tick chart. I'm going to make my trade decisions based on the 1000 or the 2000. Now let's see the trend line break on the 1000 chart. What did it look like to me? I would have drawn this one. I would have drawn this one. I would have kept looking. It's possible that I would have tried both of these. This one would have broke even. This one may have had, a loss on it. And then I would have drawn this next one over here because we keep looking for the best trend line setup. And this one would be from here to here. That's the 1000 tick chart. Now, the reason why I'm looking for shorts to begin with when price is going up here is because on the higher time charts, the 10,000 and the 5,000 have to definitely agree. I'd like them to agree. They have broken down below, and it's been trending down from the previous day. Been trending down. We're using the day chart to show us the activity of the market not having a strong bullish bias either. So when price breaks down right here, this looks good. Price going up here, we knew that was weak. We knew that this was questionable and weak because of the position of the moving averages in relation to the 200. When price came up here, we knew it was weak because we were watching the 10,000 tick chart. Also, we can, also use what's going on the hourly chart. Here's the hourly chart. When price drops below the 20 and the 50 on the hourly chart, that's definitely a sell signal too. So on the hourly chart all day yesterday, as the price has dropped below, there's a sell signal right here. It's not a strong sell signal. Now it's getting into the stronger sell signal because it's below the 200. But when it crosses below the 8 and the 20, and especially when, the 20 and the 50, and especially when the 20 and 50 cross one another, now it goes from strong to stronger to strongest kind of thing. So when price pops up here, that's a weak buy signal because the moving averages have crossed one another. It depends on how you want to, look at it. It's worth a try, in my opinion, to go short on that using the weakness on the hourly chart and the head fake to the top side there with the moving averages had already crossed one another. It's also possible we would have avoided that trade altogether just because it would be too hard to read. What are we doing? We're looking for a pullback now. It's clearly, a sell signal. We also have to understand that there's been head fakes up and down, up and down, up and down. Remember the kind of week we're having, sideways. Remember the kind of day we're having. We are approaching the low of yesterday and a trend line. This is an area that it could break or it could spend all day long chopping around. As we saw yesterday, price closed right at the low of its previous day and it chopped around that area, head faked it multiple times. So we could see something like that in this area right here, or it could just push right through. Who knows what it's going to do? But it is reaching the low of yesterday. It is reaching a multiple day trend line area and an uptrending 20 EMA. So am I real excited about trading it? If we find a trade opportunity, I would say it's worth a try, but I don't want to do it so close to the previous day's high right here. So I'm looking for it to bounce up quite a bit, meaning I want to see price go way, way, way up, way higher. Something like, this, let price go up here and then start to drop. Get away from this line at the bottom. Get away from this line at the bottom here. Okay, so that's what we're looking at. Is there a possibility to take a bounce off this trend line and not use the moving average strategy? Yes, there is. For other strategies, this will be a perfect opportunity to catch some kind of trend line bounce strategy. It's a perfect strategy because it's bouncing off a trend line and it's bouncing off of the previous day. So you got two confluences there. Beautiful opportunity for certain strategies. I don't see how I could use that in my moving average strategy, so I'm not going to take that trade. But it sure is tempting, I'll be honest with you. Let me just examine how we could have taken that trade. It's not going to be a moving average strategy trade because right now we're looking for sell signals. And this is a counter trend trade, obviously. So we would draw the trend line down this way. And as soon as it bounces right here, we would look to enter on these candles right here. And our stop would be right underneath like this, like this. And let's see how that would work. I'm not saying I'm taking this trade. I'm just saying how would that work. Enter in the circle at the trend line break. We know it's in an area where, there is some potential support. I think if you're going to use a trend line strategy, this is without moving averages, just the trend line on the daily chart at a conjunction with a pivot of a previous day's low. I would say this is kind of worth a try. But right now I'm not going to take that trade because I'm trying to stick to one strategy this month, and I don't want to break my goal or word. I have been doing that, and I don't want to continue to do that. We really have to keep our word when we are practicing. We would have hit 1-to-1. We would have moved our to break even, and now we would be sitting on break even right at the entry point. Once it hits 1-to-1, we go to break even on that. Now this could roll down and give us a sell signal, but do I really want to try to sell this at such a key support level? And I don't. I said I wanted to go up higher, which means let's use the Fibonacci for a moment here. I would want it to pull back at least 50%, which is probably going to put it up to that 200 moving average area. Yeah, 50% right here, and 60%, as you see, will be heading towards that 200 moving average if I'm going to sell it. It may be that this is as high as it's going to get. It's going to break through all this and keep going straight down. It could happen that way, right? So let's take a look at this. It could happen that this is just going to bolt right through. The first time it touches, you get a reaction. That's typical. That's understandable. There's a lot of people right there taking this trade long. So you're going to get some kind of bounce. Okay. If there's not enough to hold it and we're going to get a multiple day pullback, if we're going to come down to the 200 moving average, the 20 EMA, we're going to look, it's going to have to come down past that point, and we're going to see the level broken. But is it in a good spot? I'm supposed to be critiquing today. All right. So here's the opposite way. We probably would have broke even on that trade. So let's say that was a scratch trade. Let's say we entered the other way, and now we're going short. All right. So let's take it like here. Let's say we take the trade short. I'm not doing this. I'm just paper trading because I want to critique the trade, and I want to wait for a higher pullback. But let's say they take the trade here. It could be a bull, a bear trap. Obviously, they wait for the trend line break, and then it's a terrible place for a trend line break, in my opinion. You see how it's just right on its pivot levels, support levels, and we know on a daily chart there's a trend line there. Again, anything can happen, anything can work. You can throw a dart at a trade and maybe get lucky. But if we want a higher probability trade, I would wait for this to go higher to short this. We did get a break even 1-to-1 on the bounce if we were taking just a raw trend line break off of the daily chart support levels, and it would have broke even. It didn't go very far. That's why it broke even. Now the short side is viable for those of riskier taste. I don't want to take the trade when it's this close to support. However, on the daily chart or on the 4-hour chart, once it breaks, and there's just multiple trend lines right here from different angles that you could draw on the 4-hour chart, saying this is a pretty solid spot. However, if it breaks these, I would be looking for a retest, a roll up, and then a continuation down. So we would have to see some type of let me draw it on the chart here. I would want to see it to break down, come back up, and retest down to maybe this trend line down here at the bottom. Okay, if I'm trading on the 4-hour chart, if I'm using the 4-hour chart. Right now, all we are doing is the intraday trading, where we're not waiting for a 4-hour test and retest. We won't even get a trade today if we're waiting for that to break and then retest that trend line. All we have to intraday trade right here is what's in front of us. And what's in front of us is that it's at a support level. If it consolidates and breaks it, I'd be honest with you, there's so many trend lines underneath there. And there's another support level from a few days ago here, as you can see right here, and a support level here. The question is that enough to, take a small trade? It could be. It could be. You really want an A+ trade setup, and that's what I'm doing. I said my goal today. Today, my job is to critique the trades. I'm going to critique the trades and tell you why not to take it. If I cannot critique the trade and there's no reason why not to take it, then it's probably a good trade setup. So now if price breaks below this previous day's low, the white line going sideways, it's possible that it's going to continue down. All the time charts are saying it's going in a sell signal, and now it's a strong sell signal. And if it continues down there, that looks like we would be close to getting a break even on that short right there. It was toying around this area. Let's think clearly here. 15-minute chart. See, there's some liquidity down there that's probably wanting to go sweep, which is probably where it's headed. How far down will it go? If it goes down this far, we might get a decent opportunity. If it goes straight down, that's the hard part. Because, you'd want a trend line break. You want it to pull back, and you want it to give you an entrance in. I just couldn't see myself taking it right here at the support level. Now it's below the support level. It's showing that it wants to continue down. There might be an entrance for us here if I can't critique it, can't find a reason why not to take it. And here's a consolidation candle. I mean, this is looking better and better here. If I use that consolidation candle as my entrance, I have a really tight stop loss. I'm going to go in real close here on the 1,000 tick chart. If it continues right here, I could use the top of that as my stop loss. That's if I want to take the trade shorter. It's chopping around too much, man. But the higher it goes right here, the less my stop loss will be. I think it's worth a try on this one, actually. It might have stopped me out right there. Let's draw my... or sometimes it does a wick up, it does a stop out, a sweep before it continues to go down. It's also possible that this is way too tight of a stop loss if I were to try to short that below the previous day's low. Well, what it's doing is it's bouncing off that area, which is expected, and then it's showing weakness again. And it looks like if it consolidates and pushes through, that would be a good trade setup. However, that's not my moving average strategy, trendline strategy, unless I could use the trendline break right here as the reason why I was entering that trade. And if it was, I would have entered way up here, not way down here. So technically, if our stop was above this pivot here, which is where it was, and we attempted to go short there, right here on this entrance level here, say it went up and tested, that probably would have been a better entry on the retest. So obviously, that would not have worked right here. It would have been a very, very small stop loss, though. So sometimes when the risk is so tiny, it's worth the try, So if we were still in this trade, we would be in somewhere in this area for the short one. Remember, the long one basically broke even. Now the short one, we're still, if we did enter that area right here, stop loss is still up here. We didn't get a chance to go to break even. It didn't quite go down enough. And we're seeing what happens here. If it goes up to that red line, it would have been a loss. It would have been a loss. You see how it's bouncing again. If we get a double bottom, a W pattern, a double bottom, more or less, that's an indication that it wants to probably go up, especially if it breaks that pivot. Then we get a higher high displacement to the upside, even though it's in a strong sell signal. It's a strong sell signal. Sometimes you can get reversal patterns just on price action if you know how to trade that. Okay, this strategy, moving average trendline strategy, observes those kinds of trade opportunities. But if we're trading just this strategy, you don't take that trade. Now, if you have to expand your trading strategies and knowledge and experience to add other strategies over time to become a master of multiple strategies. Right now, we're just using the moving average trend line strategy. And if I could see another trend line, sometimes all you get is a shallow pullback, then the trend line break would be viable here, and you could use, the top of that as an entrance. It's still toying around that area though, and it's possible that it's going to just go right on through there. It's making lower highs. You see the lower high here, the lower high. If it could break this pivot right here, that would be substantial. I'm not interested in right here at this line right now. I want to see a lower high, let it come back up, create another lower high, right? Because it's in a strong sell signal on all time charts. I mean, all time charts, strong sell, strong sell, strong sell, strong sell. We have agreement on all time charts that this is a strong sell opportunity, okay? We would still be in this short right here had we had the courage to take it. But I wanted to see how price is going to act at this level first. And it looks good. It's getting weaker and weaker. That's a good sign. It really is. It may be worth a try here to short this. And the only downfall is if it is too strong of a support level on the daily chart. That's what's holding me back. That's my only critique on this thing right here. Let's look at that again. You'll see that little area right there is pretty darn strong. However, this is the third time it's touched it, and it's getting weaker and weaker. And it might be worth an attempt here to shoot that thing, and let's try to do it, to keep the stop kind of tight maybe. I could give it one try. Let's try to do that. I think I'm about to push the sell button. But I just don't know about that daily chart yet. And it's possible I'd want to see it break that level, and then
order filled.
I'm going to do it. I'm going to put one of my stops up a little higher here, and then one of them above this pivot here, and then let's see how this works. It's possible to break even. There it goes. I'm going to break even on some of that right now. All right, we're sitting on break even right here. Hopefully it will go down. I hate it when it comes up and just stops you out at your break even point.
Stop filled.
That's all it did. It took me for break even on that. I only had one on break even. The other one is sitting up here higher. I'm going to trail it as soon as it hits target one. It was really hard to make that decision, and I'm still hoping that it's the right decision here. A couple trend line breaks, weaker and weaker, higher, lower highs. That's the reason we did it. It is risky though at that level on the daily chart, because it can just come right up. I'm hoping that it doesn't make a higher level here. Of course, it could just come up and sweep and then go back down. That's how things work sometimes. On the 2000 tick chart, I got my stop above this pivot here. If it's generating lower buy side liquidity, it won't really come up over the top of that one. That's the theory anyway. What we really want to see is it to come up to that level, retest, consolidate under this level, consolidate, show weakness, and continue down. That's what we really, really, really want. If it puts in another level here off of the 20 EMA or something, I'll move my stop down. If this pivot level gets broken right here, I'll move my stop down to that level right there. But this pivot level has to be broken first. This pivot level has to be broken first. It has to break that pivot level. It's a nice reversal candle, but I really want to see that pivot level broken before I move my stop down. All right, trailing stop kicked in and it started to go down. It did break that level, and I don't really know what to do here because it's more than likely just going to come back up and stop me out where I've trailed my stop.
Stop filled.
And it did. But the trade worked. My trailing stop trailed me down to a point where it just pulled back to the 20 EMA and triggered me out. So I didn't get very much on this trade at all. I like the fact that we took the trade. I like the fact that we were very cautious about this area on the daily chart. I like the fact that we had the courage and sense to understand, look at this. This is a bearish candle pushing through that pivot level. It is making lower highs, right? And it did break some trend lines, so it meets our criteria. Strong sell signals when price is on one side of all the moving averages, so it's on the bottom here, so it's a strong sell signal on all time charts. This is a perfect example, all the time charts agreeing in the direction of the price. It's a perfect example of how you can go either way with certain ideas. Some will work, some will not work. You can break even on some of them you can make a little money. Some of them, if you trail your stop properly, I said I was going to put my stop here when it broke this pivot. I'm interested to see if that would have been a great idea after all, because my trailing stop is automatic on my settings, and it just automatically trailed me, and I was in the other room. I came back, and I didn't really want to lose if it did come up here, so I just let it tag me out on my trailing stop. But here's where my stop should have been, and let's see what happens. If it comes back up here and stops me out up here, it's too choppy, because that would put it back up over the pivot level. It would come all the way back up over the low of the previous day. And we don't want it to come back up over the low of the previous day. We want it to stay down below this trend line, down below this line, previous day's low. We want it to stay down in this area. We want it to come down to the 20 EMA if it's going to be a good sell opportunity. So I'll let you know what happens with this, because now I'm just observing what would have, could have, and should have happened if I had my stop loss only at this pivot right there. Let's see what happens. I could have done my profit target a little differently also. That's something I want to record here. These little dashed lines are areas where there's support levels, and you can see on the other time charts here that it's coming right down into that support level. I got stopped out. It hasn't hit that level yet. My trail stop was too close, and I should have put a target. I should have put my stop up here until at least it sweeps the liquidity of this particular line right here. Now this yellow line is the low of the previous week. So those are targets. And I wish I was still in this trade, at least until it hits these targets, right? I should have kept my stop back far enough for these targets to get hit here. Let's look at the weekly. All right, now you see this is just dipping around, trying to play games here. It's still underneath the previous day's low, right? And this is where my stop loss would have been, up here. So I think we're still safe on the idea that it's looking to grab liquidity down below. There's two levels right here that it could grab, and let's see, it may even go all the way down if it keeps breaking down on the daily chart. The daily chart is pushing more and more down. Here's the liquidity levels for that, and this is where I think it's heading, probably down to the 20 EMA. At some point, a strong bull run does correct. And it would be nice to see this bull run pull back even to the 50 EMA. Really give us some good, strong moves up like this again right here. That was a good day. So let's see how it goes. Okay, we can see that it did sweep liquidity. It did sweep both of those levels right here. And we can see right here on the 5,000 tick chart. And we have the liquidity sweep. Does it want to keep going down low? I don't know. It's popping up pretty wildly here. And of course, those are levels where a lot of people have their sell stops. It could be an area where it just goes back up, really, honestly. We'll see. It could also give us an opportunity to find a trend line break to the downside and carry this thing down. But I do want to make a point that if we had gotten in this riskier trade right here, we would still be in that trade. That would have been a nice trade. Even the one that broke up higher, once it started breaking, where I got in, where did I get in? I think I got in right here. That was my trade one. And it went down. It just didn't go low enough for me to do anything with it, Here, yeah, my stop was there. So my target was here. I probably would have hit 1-to-1 on that at some point. Yep, it would have hit 1-to-1 if I planned that a little bit better. And I would have hit my target. So what it looks like here is it would have hit target 1, and my target would have been at the liquidity levels, which is smart. So that's something that I need to make sure that I am paying attention to. The riskier trade did work. The less risky trade worked for a 1-to-1 target on that, and it's not done yet. I should have put my target price at liquidity. I should have kept my stop back far enough So when it's trailing, I want to be careful with my trailing stop, because if it's trailing, then it may stop me out too soon, and that's something I need to pay attention to. All right, I'm going to get in late, but I'm going to only enter one contract, and I'm going to add another contract if price comes all the way back up to a high level of rejection. If it keeps going down, then I will, well, hold on.
Order filled.
I didn't want to do two. Let's just do one. Sometimes accidents hurt you, sometimes they help you. I want to try to add to this trade when it comes back up, or wait. This is kind of stepping away from my trend line trade. Why don't I just wait until one of these little tiny trend lines break like this? That'll keep me in focus. I could wait till it comes back up, creates a little tiny trend line, and assuming that it's going to continue down, it might be close to this moving average already. Let's take a look at that real quick. You can really see on the 60-minute chart where it wants to go, grab liquidity down here. I don't see why not. 4-hour chart shows us a bunch of levels all the way down to here. It's broken the trend line. Now it's in the second candle on the 4-hour chart. It went up to, it gave us a pintail. I wouldn't be surprised if this continues lower at all. So I'm really interested in a pullback to where I can get a trend line break and continue down. Now, the pullback may be substantial. It may be 50% of this drop for all we know. Let's go to the 10,000 tick chart, or at least this one here, 5,000 tick chart, and let's look at the Fibonacci. Let's say if it wants to pull back 50% of that move, it's going to be tough, because it's going to go back up over the previous day's low, and it's going to have to test these downtrending. It's going to be a real head game, you know. Probably be better if it pulled back from this peak, and that would keep us 50% of that little move there would keep us right in a comfortable level underneath the previous day's low, and underneath these moving averages for the most part. So let's see what kind of pullback we get here, what kind of opportunity we get here. Well, if price had come all the way back up, it would have broke me even, because if my stop wasn't left at this upper pivot level, then it would have came back up to my entrance point and broke even. So now it did come up quite a bit underneath the previous day's low still, though, which is great. It is creating trend lines here. There is a potential for us to try to short that. Let's see if it gives us... It's tough, because I want to take that trade.
Order filled.
Okay, I'll take the trade here with one contract. And this is, I wanted to go short down here, and I wanted it to come back up so I could add to it. Well, now it's already back up here to begin with, so this is a good entrance if I want to add to the contract. I really don't want it to go up over the top of previous day, and if it does, you know, we're going to be looking for it to get stuck in the moving averages and kind of rotate back down. But we'll see how this works. Here we are on the 5,000 tick chart. Yeah, it could go up. I don't really want it to go up over the previous day. I don't want it to go back up over this pivot right here. So we'll see what happens. All right, I was hoping that it would stay below, and this is what we're looking like on the 4-hour chart. And this is a good resistance area. When it comes back up to the pivot and up to the trend line, it can get stuck right there. So I'm not too concerned yet. If it pushes up over the top of that, however, and keeps continuing to make a pintail and rise above, that's going to be a danger. It really will be. And then I'll be looking to kind of like figure out how to bail on the trade. Right here, I've got an add to this at the 200 moving average at the top, where we will scale in, and then I like to have two contracts anyway, so I just entered in with one. So we'll see. It's possible it's just going to come up here and sweep some liquidity and then head back down. So my stop, maybe my add should be, let's put it at the top of that like it's a stop loss. Sometimes you can enter in where you would normally put a stop loss. Okay. Now, why did we get in this trade? We got in this trade because of the trend line break. And I was planning on a small entry and it going against me, which is exactly what it's doing. So I entered in with one contract instead of two. I like to do two contracts. So if it comes up here and gets me in, my average price will be right about here. And then we can see about our risk level and how much we're going to risk on the trade. And it looks like it wants to try to push back up over that. Unfortunately, I don't like that. So this is where my stop loss was. Okay, let's examine this first trade we did. If I left my stop loss here and did not take target 1 down here, it would have come back and stopped me out for a loss. So I got out with my trailing stops, and it was not a very big profit. I could have hit the 1-to-1 target on it though, if I didn't trail so close. So keeping it on break even might have been a smarter move, but then again, it came up to break even. I know it's tough, man. It's really tough because you don't want to get stopped out too early, and you want to hit your target. So anyway, what can I learn from this? I need to figure out what I can learn from this exactly. So I entered in right here at the circle. Price came down to here. I guess if I would have just left it alone and let it go to target 1, I could have either taken my target 1 profit or put my stop on break even. Either way, it would have been a 1-to-1 reward, or it would have been a break even trade, because I wouldn't have wanted it to come back up here and stop me out. All right, so let's see what price does here. Here's another trend line possible break. We want it to stay below the previous day's low. And it's toying around that area like it did yesterday. It just kept jacking around up and down its previous day low, and now it's doing the same thing today with yesterday. Let's see what happens. We're still got our plan, and hopefully it'll work. All right, what are we noticing on the 10,000 tick chart? It's chopping around in between previous day low and the liquidity sweeps from previous days. It is still in a strong sell signal on our main 10,000 tick chart. 5,000 tick chart, it entered into the caution zone, but still has a sell signal on it, crossing some of the important lines on the other two charts. The 1,000 and the 2,000 tick charts are going to look like they're changing direction sometimes, or often, when the higher time charts pull back to the caution zones. That's normal. That's to be expected. We want these higher time charts to remain in the sell signals. Once they start changing from the sell signal, once they both get into the caution zone, then we're really, have to be very, very careful. 2,000 tick chart stuck again at a pivot level, just like yesterday, chopping around the pivot levels. Okay. Once it gets up over the top of both of these moving averages consistently, then it will be on a lower time chart, it'll actually be a buy signal, but we don't have cooperation on all time charts, so it's not that significant yet to go long. We're still maintaining a short bias right now because we're actually in a short trade. So you can be in a short trade and have everything turn on you. And that's when you have to have your risk management pretty good here. I'm going to try not to risk more than $100 on this trade. So if it comes up here and sweeps this level of liquidity, like I'm thinking it might, that's a normal thing for it to do before it goes back down. If it sweeps this level of liquidity here and my average price is going to be at a reasonable spot, my risk will be $100. And if it continues up, I'll stop out at $100. So I already know what my risk management is. And what I'm hoping is that it could sweep up here, get me in, and then continue to head back down to this area. Seems to be some kind of an attraction level here where at least I could break even. And then if it goes back down below the previous day, we'll be in the green. But the risk management's already in place. No more than $100 on this trade. Okay, what do we got on the 10,000 tick chart? It pulled back to the caution zone for a strong sell signal. It pulled back to its caution zone on the 10,000 tick, in between the 20 and 50 on the 5,000. It literally came back into the danger zone. If you have a strong sell signal, it pulled back to the 50% of this entire move down, which I said was going to put us above the previous day's low and over the moving averages, which I didn't really want to see. However, it's mixed now, to be honest with you. This is where I need to continue to learn my own perception and understanding, and I'm learning too. I know when things are clear, but sometimes things are foggy. Okay, because let's look at the 2,000. On the 2,000 tick chart, moving averages are still below the 200 moving average. Okay. If we need to start seeing some sales candles here, because if it continues in that direction and we get, right now we have a temporary weak, a very weak buy signal because price has gone up over the top of the 20 and the 50. It's very weak. Now, if the 20 were to cross over the 50, it gets stronger, and it's only stronger, but not the strongest signal because everything's underneath the 200. It's getting stronger and stronger, in other words. So right now, there's a point where it just changes. There's a point where the idea falls apart. There's a point where, okay, this is not working anymore. That's why we have to have our limitations, our risk management in place, obviously. I'm just trying to go through the thinking process of what we're looking for here. Are we still looking to short this? And if we are, where's the trend lines? Because looks like there's about to be a trend line break here on the 5,000 tick chart. If it closes like this, it will be. On the 2,000 tick chart, we already have a break. We had a break up here right at the 200 moving average, which would have been a great add right there, right? Stop loss above the top of that, and he probably could have broke even on that 1-to-1 already. It's tough because, we have to decide where we're going to stop looking for the short. And, when we get both the 10,000 and the 5,000, here's the 10,000 at the top, closing above the 20 and the 50. When both of these are closing above the 20 and the 50, this one's already closing above the 20 and the 50. Now, if we get the 10,000 to close above the 20 and the 50, that's going to be such a deep pullback. But we've noticed that that's also a good area for the best possible, as long as they don't cross. Remember, on the bullish sense, if price spikes back up towards the 20 moving average in either direction, if price spikes towards the 20 and the moving averages do not cross each other, but sort of maintain their spread, then we're still bearish in that direction. We're still going in that direction. Okay. So right now, let's keep that in mind. Let's keep that in mind. All right. That it has not crossed. The moving averages have not crossed on the 5,000, and they have not crossed on the 10,000. Now, the only thing that can get in the way of that is some kind of macro levels on higher time charts, something that says this thing's going to keep going up. And we might be getting that here because we had a nice bounce off of yesterday's previous day's low, and we had a nice bounce off of that trend line. It did go down. We did get a short. There was some opportunity there, but it's just back over. It's back over that key level there, and this is a danger zone in itself that the short idea may be over. Okay, so now we have to use the day chart to tell us, hey, don't be surprised if this does continue to go up. We're in a no trade zone or a hold your position zone, don't add to anything kind of thing because of the day chart. Yesterday, I did not take into account the day chart, and I got myself into trouble. Today, I need to really pay attention to the day chart because we're critiquing the trades, looking for reasons why not to take the trade. If I wasn't already in the short trade here, because the trend line broke way down here, and when it broke, it was underneath, it was still in the sell zone. It was still underneath previous day's low. Right? It went up to here, and I added because it swept liquidity like I was thinking it was going to do. And it swept all of this liquidity up here, every single peak up here. And I had my add near these peaks. I should have had my add at the highest level. Next time, that's what I'm going to do. I'm going to put my add to 2 contracts at the highest level from now on. Okay? We averaged our price from way down here to right up here. So we're in an area where it's manageable. And it did cross the $100 risk limit, unfortunately. And I didn't bail on the trade. So that's a weakness. I want to make sure I get that in the video. I want to write that in my notes, that it crossed the threshold of my $100 limit. Not by very much, but it did. And, you have to have your limitations. So that's one flaw that I made on this for sure. But let's see how this trade ends up working out here. I'm going to get out of some of this. I'm going to get out of one of these positions when it comes down to break even because of the day chart being above previous day high and above the trend line. I don't want to take a chance on it continuing up. So I will exit out of half of this when it gets to break even, if it gets to break even. Okay, it came very, very close to break even, a couple ticks away, so I closed half the position. Now we're in a really good price range. And with the danger of this being above previous day high and that trend line on the day chart, it's possible that I should have just closed the whole thing. I'm not looking forward to battling this if it's going to be a bull run today. All right, some interesting developments. It did come back down to the average price and where we had got out of half the position. Now we're just basically in at a better price. We started shorting right here when the trend line broke. Things had pulled back to the danger zone and into quite a pullback to the 50% level, but then it's rolling back down. And where is it now? At the low of previous day, where it's been chopping around and indecisive. It has broken below, but it just came right back over the top. Now, hopefully, it'll break below again. We are in the short. We're going to hold that short, probably using this pivot level as our stop loss on this one contract now, since it's already rolled up to 50%. If it goes up over the top of that, it's probably going to keep going. So now we have a pretty well-defined area of risk, and we're looking for it to come back down to these lows down here. So let's see what happens. All right, I decided to close this position. It's going back up over the low of previous day, and it's going to be lunchtime here before long, and I'm just not going to mess with it. Basically a break-even trade. Took on more risk than I wanted to, so that's a fault and that I need to record. But otherwise, it was a break-even trade. What can we take away from this? I don't like trading at lunch hour. We could take that away. Price has really gotten back into the strong sell zone. It's below all moving averages on the 10,000 tick. It's below all moving averages on the 5,000. It's below all moving averages on the 2,000 and the 1,000. Why did I get out of it then if I was short? Well, again, back to that day chart. It's in an area that yesterday I learned a lot about the day charts and how vital they are to the intraday trading. It might go down again, but I think it's put in its bottom for the day, just for the day. If it goes past the low that it's already created and pushes down to the 20, I'll be highly surprised. Something big's going to have to happen in the market for that to happen. It could happen, but I'm not sure. It's possible I could have just stayed in the trade, but because I had, because of the day chart and because I'd had taken on more risk than I wanted to up here, I'm going to go ahead and bow out of this trade and count my lucky stars that I didn't get hurt from that flaw. You don't want to set a loss limit and have that loss limit break, and that's not good. Since I did do that, even though the trade worked out, that's a bad habit. We don't want to make bad habits and continue them. I decided it's best for me to close this trade and meditate on my mistake and concentrate on not doing that again. Real quickly, I do want to talk about this missed opportunity. I should have had my stop at the liquidity levels right here where it had swept at the 200 moving average on the 2000 tick chart. It did go into a weak buy signal on the lower time charts, 1000 as well. But I'm watching the 10,000 and the 5,000 over here. It just pulled back to the caution zone. Trend line broken. Caution zone. After the liquidity sweep, into the caution zone and look for reversals at that level. It was also a 50% pullback of the entire move right here. Okay. So this would have been very interesting area to try, a more precise area to try to short that back down. Trend line break off the 200 at 50% after the liquidity levels. That's all basically an A+ trade setup. Using the 5,000, see it pulled back to the danger zone in the 5,000, but look at the moving averages had not crossed one another. The 20 did not cross the 50, so it's still within a reason to short, right? 10,000 tick chart, it only pulled back to the caution zone, trend line break. After sweeping liquidity at 50% of this pullback, it went 50% back up. Perfect confluences, multiple things harmonizing together to point out a A+ trade setup. On a 2000 tick chart, yes, you got a temporary weak buy signal, but the higher time charts are allowing it, and its descending 200 moving average confirms that we're still in a downtrend. Perfect area for the sell signal. I stopped trading because of the daily chart in that area, but look, I ignored all of the strong sell signals. Remember, all these are sell signals. They're strong sell signals on all the time charts. So I have a weakness in merging the ideas of strong sell signals on all the time charts with potential resistance on the daily chart. That has been a challenge to comprehend and manage and understand how to work that. I just want to make that in the note in the video.